Ever wondered where smart money is heading? As we navigate the intricacies of 2024, a year marked by promises of economic shifts due to the upcoming election, there is a collective aspiration that the entire economy will remain stable and not succumb to uncertainty. Here's a question to get your financial gears turning. In today's video, we're revealing the 15 asset classes or sectors that are not just anticipated to endure the challenges of 2024, but are poised to excel exceptionally. Arts. In the realm of investment opportunities, art is positioned as a standout asset, poised to captivate investors with its potential for substantial growth. Beyond its visual allure, art holds a unique place in diversified portfolios, offering a blend of cultural enrichment and financial resilience. The intrinsic value of art goes beyond mere aesthetics, as it possesses the ability to transcend economic fluctuations. As the art markets, both traditional and digital, continue to evolve, the potential for significant returns becomes increasingly evident. The brushstrokes of creativity may very well paint a path to impressive financial gains, making art a compelling choice for those seeking a combination of aesthetic satisfaction and investment potential. Consumer staples. Consumer essentials remain resilient even in the face of economic downturns. Certain indispensable items continue to be in demand, making stocks in these companies a wise investment choice during challenging times. Historically, consumer staples have demonstrated notable strength during recessions. According to Business Insider's analysis of the 2015 market performance, consumer staples outperformed the S&P 500 by 49% over a 25-year period, largely attributed to their robust performance in 3 recessions. Taking a closer look at consumer staples during U.S. recessions reveals their consistent reliability. For those considering strategic moves in the market, investing in consumer staples emerges as a compelling and potentially rewarding option. Precious metals. For a straightforward investment approach, consider opting for gold. Its performance closely aligned with the S&P 500 last year and is expected to maintain similar stability unless unforeseen challenges arise. During economic downturns, gold tends to outshine the stock market, showing a 20 to 40% outperformance. Think of gold as a reliable hedge for your investments. Unlike stocks, you can physically possess gold if you choose to buy gold bars, providing a tangible and unique aspect to your portfolio. Most trading platforms now facilitate the purchase and holding of gold, mimicking the approach for stocks. This avenue allows for both flexibility and a hands-on experience with your investment. Cash. Surprisingly, cash emerges as an exceptionally valuable asset in the current scenario. The key principle here is exercising restraint in purchases. Safeguard your cash reserves diligently because possessing liquid assets will be a rarity when a promising opportunity arises. Adopt an assertive approach when making cash offers, as scarcity enhances your bargaining power. Being cash ready can earn you preferential terms and superior deals, particularly in a climate where liquidity is limited. With inflation seemingly in check, holding onto your funds for the next 6 to 8 months could position you to capitalize on potentially lucrative opportunities, akin to striking gold. Profit-first business equity. Lucrative enterprises are the contemporary gold mines, with the benchmark for financial success now set by businesses consistently operating on a surplus. Private equity firms are eagerly acquiring such enterprises, making them highly coveted. Surprisingly, mundane businesses have become a hot topic among popular financial influencers. Owning a stake in these stable businesses provides a sense of security, allowing for a more peaceful night's sleep. However, managing operations is growing more challenging, with suppliers increasing prices and the cost of goods on the rise. International currencies. Contrary to expectations, the strength of the dollar is not as robust as it may seem at first glance. The continuous printing of money has led to a gradual depreciation relative to other international currencies. As of now, the exchange rates illustrate this trend. 1 CHF equals 1.16 US dollars. 1 GBP equals 1.28 US dollars. 1 euro equals 1.09 US dollars. Diversifying your savings into multiple currencies, or at the very least a more stable currency, can serve as a protective measure against the repercussions of excessive money printing. Real estate. Properties vary significantly in their attributes, and not all share the same level of appeal. Exceptional commercial properties continue to yield substantial cash flow for landlords as businesses actively seek opportunities to reduce costs. Relocating to more affordable office spaces is often a primary strategy. On the flip side, mid-range and less competitive commercial properties are expected to face considerable challenges. Location and proximity to city centers are additional factors contributing to property success. For instance, many Airbnbs are likely to be affected. Bitcoin. Bitcoin not only emerged as one of the best performing assets last year, surging from 17,000 to 40,000 in just 12 months, but is gearing up for another significant event this year, a halving. This technological shift in the Bitcoin algorithm involves cutting the reward for miners in half, effectively making the creation of each new Bitcoin more expensive. Historically, Bitcoin prices have experienced notable increases around such halving events. Debates surround whether the anticipated price change is already factored in, with some offering predictions for this cryptocurrency's future value. Gas and oil. Exploring the energy sector, specifically gas and oil, could be worth your consideration. Although the volatility of this industry has deterred some, traders we're acquainted with have reaped substantial profits in the last year and express optimism for 2024. While renewable energy will be discussed shortly, it's crucial to acknowledge that a significant portion of our energy still relies on oil and gas. Abroad investments. Consider exploring international options if you find prices surging in places like Canada and the UK, making purchases impractical. Currently, Spain and Portugal stand out in Europe, offering rare opportunities such as a seaside apartment for $100,000 or a land-rich house under $200,000. Reflecting past trends in Thailand, Indonesia, Dubai, Vietnam, and Croatia, the spotlight now shifts to South America, particularly Colombia and Ecuador. In places like Cartagena, a two-bedroom property can be snagged for under $50,000, making these regions appealing for affordable real estate opportunities. Solar and energy. The renewable energy sector is steadily ascending, establishing itself as a dependable investment over the next 20 to 30 years. This trend is predominantly visible in the retail sector, where individuals increasingly opt for long-term cost-saving measures. Many are willing to sacrifice immediate comforts to invest in solar panels and in-house batteries, particularly those with the financial capacity to explore such options. On the corporate side, the shift towards electric solutions is driven by the implementation of carbon taxes and the associated advantages of embracing an eco-friendly transition. Health and drugs. From our initial choice to the current trend of people ingesting numerous pills, there's a growing obsession with extending life, particularly among those with the financial means to afford it. Health is currently in the spotlight, experiencing a significant surge of investments at an unprecedented rate. Innovations like Vienna's Epic have revolutionized the perception of weight loss and introduced category-defining products, especially during economic downturns. In times of recession, people often turn to lower quality foods, contributing to widespread health issues, leading to an increased reliance on pills. Do-it-yourself services. Diversifying income streams beyond conventional options like food delivery or ride-sharing has become commonplace. Companies emphasizing additional income opportunities, especially those focused on user cost savings, are positioned for notable success. The potential for reinvention, exemplified by Groupon, and the emergence of more affordable alternatives to platforms like Airbnb or Booking are on the horizon. The overarching goal is to empower individuals to regain financial control. Many people overspend and lack fundamental financial literacy necessary for wealth building. Even if not living paycheck to paycheck, they often face a holiday-to-do surgery scenario where little to no money remains by month end. Short-term bonds. In the past, extended duration bonds have typically yielded greater interest returns compared to their brief duration counterparts. However, the landscape shifted in 2023. Shorter-term bonds now present a distinct advantage. In times of increasing interest rates, prolonged duration bonds experience a decrease in market worth. Conversely, this poses only a negligible concern for short-term securities, especially those with durations of 2 years or less. Cheap labor. Tapping into affordable labor or the influx of immigrant talent, a constant dynamic where there's inevitability someone willing to take on your role for significantly less pay, driven by circumstances from which they're emerging. The realm of human economic migration is poised to become a frequent headline feature, typically categorized as mundane business news. As previously highlighted, our focus shifts towards skilled professionals who are ready to offer their expertise at a value determined by the market rather than governmental influence. There you have it, financial trailblazers. If you found this guide valuable, don't forget to hit the like button and subscribe for more financial wisdom that empowers your journey. Remember, these insights are your compass in navigating the dynamic landscape of 2024.